Welcome all you traders out there. Once again, this is Coach Gino with TackleTrading.com option report for April 30th to round out the fourth month of 2016. It's been a great trading year so far. Let's go ahead and take a look at, we're going to start off with the Bulls team. We're going to talk off with the bullish team, and let's just do a shout out to our new artist, Tyler Craig. Love the logos. Love the bull right there. Great job, Tyler. Thank you for donating the art to us. Appreciate that. Let's start off. On the bull team, we have a few picks. If you look at our market report under newsletter, you'll notice that most of the sectors are bullish. We've seen a lot of strength in healthcare. So my first pick I like is United Healthcare in a nice defined channel. Look at that defined channel. Very parallel. We got a hammer. It formed with big volume. What I like about this would be probably long calls or long call spreads. And the main reason is the volatility. Look at the implied volatility down here on the options. Options are cheap. We're past earnings. My trigger is just above this hammer in this area here. Great candidate. Next candidate we have on the Bulls team is Johnson & Johnson, another healthcare pick. Again, you can see it using the 20-day moving average as support. A nice defined up channel, very strong. Again, cheap options. It's a doji on support by here. Let me zoom in a little better. There's a doji right there. Indecision candle. That's a good sign that it could reverse. So our trigger, my trigger is a little bit higher. It's up in this area here. When that triggers, another good candidate for long calls or long call spreads because it is an expensive stock, about 112. But even though it's an expensive stock, options are pretty cheap. Pretty cheap. They're only sporting about a 15 to 16% IV. It's past earnings. A follow through can send this to the top of the channel. One more bull pick I'm looking at this week. ALB. ALB again. Finding support on the 20. I like the volume that came in. Low cheap options, low IV. Same story, defined channel. One thing you got to be careful of, next week is the highest week of earnings. I believe we have over 1,500 companies reporting next week, the first week of May. Therefore, you got to make sure when you're screening for stocks during earnings season that you don't jump into something right before earnings and get caught unaware or you're surprised. This one's coming in, I believe, around May 11th. May 11th, and that will be the conference call. So earnings actually May 10th after market. So May 11th, this could possibly gap. I'm not seeing gaps in the past except for right here. Therefore, be careful. It is earnings season. So there you have a few of the bull picks. Let's jump into the bearish team. The bear team. What do we have in the bear team? Let's check it out. One of my picks I have for the bear team is, I'm going to start with Akamai, AKAM. I'm liking this setup for the bear side. Why? There's a swing high that formed here. A lot of support down in here. Pretty defined. It ran up after earnings. Had a hard time getting through resistance. So if it breaks down below this channel, good candidate for long puts. Why long puts? Why not a credit spread? Well, you can do anything you want. You can do anything you want. I'm going to favor the positioning of the options. And right now they're telling me they're cheap because it's after earnings. The volatility is really low for this stock. If options are cheap, I'm buying them. You can do a bear call spread, a credit spread if you want. For me, I take advantage of the option pricing. Next one for the bear team is a very popular stock, KO, otherwise known as Coca-Cola. What we have is a trend breakdown here, and it's starting to define a new trend. I'm looking at this to the downside and waiting for it to trigger and start jumping back into this channel on the downside. Earnings is over, and my trigger is down here, somewhere in this area to buy puts. Why am I going to go long puts? I'll give you a guess. Low volatility. It's only 15% volatility, and that's pretty darn low for any stock, let alone Coca-Cola. So puts are cheap, and I believe this is only going to be a couple dollars more to break down. It's a very popular stock. It's a staple. But, I think it's having some weakness in the earnings side. Now, there's a lot of bear picks out there. If you want to see some more bear picks and bull picks, visit our stock report. But I want to jump into credit spreads. In the credit spreads, as I said before, there's not very many candidates I'm willing to take a risk on because there's too many earning gaps out there that are going to affect it, and it's easier to avoid the volatility. Next week, on the other hand, we'll be past the peak of earnings season, and there'll be plenty of credit spreads to look for. Meanwhile, what am I doing to make credit? I've been selling covered calls on stuff like USO, basically exchange-traded funds under $20. USO follows oil. Another one of my favorites in there is UNG. This one's been paying off real well. For covered calls, we like to sell calls on stocks that are slightly bullish, just out of the money or slightly at the money, for cash flow every month. And if you haven't picked up some of these candidates, maybe consider selling naked puts, selling below the current price, like at a major support level, selling the put, taking on the stock, and then selling the calls against it. Another one we added to our portfolio, Gold Corp. This one took off, probably going to get a sign on those. Stock will probably be taken away. What a very powerful covered call. That turned into a momentum play. Gold is on a run. Another popular one we've been doing that's in the Tackle 25 is GoPro. Let me zoom into this so you can see it. GoPro, basing here between $11 and about $14. Great premiums. Earnings is coming up. I'm probably going to buy puts to protect myself at the end of the week. If you have covered calls and you're worried that it's going to go down, use some of that premium to just buy a short-term put to protect yourself. Another one is Fit. If anybody's wearing a Fitbit, you know this company. Again, it found a bottom. This has been a great covered call. Earnings coming up this week, right before Cinco de Mayo. Protect yourself or get out on covered calls because they are limited upside and unlimited downside unless you put a stop or you buy protection. Let's go to our debit spread team. Let's look at our debit spread. And again, we got to give a shout out to Tyler for those graphics. You guys make a comment at the bottom if you like these graphics. We're going to be changing up the change up the artwork here just to keep it interesting. But this is beautiful, isn't it? Debit spread, that is a picture of a condor. So there's a lot of condors in debit spreads and credit spreads known as iron condors. One of my first candidates here for the debit spread category is a big name, Goldman Sachs. Goldman Sachs. What do I like about Goldman Sachs? Financials, one of the biggest players in financials. Earnings is over. We've broken out of this area right here. I believe it's going to come back, test support, and go back up. It's an expensive stock. My trigger's up in this area. When it does trigger, even though the options are cheap, I'll probably do a call spread, maybe a 170 by 185. I'm not sure. If you check the option report, I'll throw a couple ideas out there. But I'm going to probably do a bull call spread longer term because I think this has some room to go up and buy a little bit of time on that spread. Another favorite strategy of mine, Facebook. My strategy is a DebiCon. Facebook jumped up after earnings, sold off. We have this big gap in here. Which way is it going to go? Honestly, I don't know. For the strategy where you don't know where it's going to go, look at the ATR. Let me point at this ATR up here, guys. The ATR is right up here. See that big arrow pointing at the ATR? It's over a 3 ATR. I'm going to buy an out-of-the-money call spread and an out-of-the-money put spread. Yep, I'm going to do both. Why? Because, again, options are cheap. It's amazing how cheap options are through this earnings season. So I can get cheap options and make them cheaper by turning them into a spread. Therefore, I'm just going to do both sides. I'm only going out a few weeks on this. Check the option report for my strategy, the DebiCon, otherwise known as the Debit Iron Condor. I make money if it goes up or down. I just don't want it to go sideways. And I'm going to position size. By the way, big note here. I'm going to position size to my risk. And I suggest you all do the same. By the way, at the bottom of the option report, let me bring this in here. You can see the risk calculator. Just type in here in the yellow area. You can download this to your desktop. your tolerance, whether it's $50, $100, whatever it is, type in the data from the options. The delta is a decimal, of course, like for example, 0.60, 0.55. Your entry and stop, that's key. When you put your entry trigger and your stop trigger in there, it will show you the max position size. That doesn't mean you have to go to the max, but keep it small. There's no reason to max out your risk. You guys practice on paper first. Do yourself a favor, practice. Manage your risk. Stay up to date with our daily trade adjustments on tackletrading.com, where I put in my adjustments and I turn these long calls and long puts into spreads. I diagonalize, protect them, hedge them. That's what I do. So until next week, this is Coach G again. Have a great trading week and a great Cinco de Mayo. That's right, Cinco de Mayo is at the end of the week. Thanks, everybody. See you on the site, tackletrading.com.